This week saw big announcements from major retail chains that could mean serious trouble for $11 trillion of commercial real estate and the banks that need it. Yesterday, Whole Foods closed its flagship San Francisco store after just 1 year, citing employee safety, meaning theft, violent crime, bathrooms full of needles. Meanwhile, Walmart is closing half its stores in Chicago, also citing crime and theft. Walmart said they were losing tens of millions on the stores and noted that they've never made money in Chicago after 17 years of trying. Walmart also closed its last remaining stores in Portland, laying off 600 workers after, quote, record-breaking thefts. The nearby Nike store was also shuttered after mass shoplifting, including 15 overnight break-ins in 2 months. That's about one every 4 days. You'd have to hire a guy just to tally up what was stolen out of the storeroom every night. This shouldn't have been a surprise. In December, Walmart and Home Depot CEOs both warned that retail theft was hiking prices and closing stores. Home Depot said retail theft is, quote, spreading faster than COVID. The epicenter is big cities, whose administrations fell apart during COVID. Lockdowns immediately started driving people out of the cities because remote workers no longer wanted to live in expensive and increasingly crime-ridden hellholes. At one point, it cost 10 times more for a moving truck from California to Texas than the other way around, because nobody wanted into California, but a whole lot of people wanted to move out. But the stores held on, hoping things might go back to the way they were. Now, they're giving up hope. San Francisco is particularly bad. The crime was front and center last week when the founder of Cash App, Bob Lee, was stabbed to death on a San Francisco street. He'd actually moved to Miami to escape San Francisco's crime, but was back in town for a one-day meeting. Now, regular people have had enough. They are getting out before their house prices crash. They're already down 200,000 across San Francisco. The city itself is draining at a record speed, turning San Francisco into a ghost town. 29.5% of offices in San Francisco at the moment are empty. That's almost 1 in 3. Pre-pandemic, that was 3.6%. You had to sell your firstborn to get office space in downtown San Francisco. There's now over 27 million square feet of empty office space, with millions more coming up for renewal where the tenant may just walk away. One major developer in San Francisco just walked away from an $84 million project they bought in 2019. They just gave it back to the bank. Gap sold their $80 million building for a 40% haircut, and another $250 million project is getting bids about 1/4 pre-pandemic price. That's a 75% haircut. In other cities, it's not much better. Bloomberg says nationwide vacant space is at a record high, almost 20%. So 1 in 5 offices in America right now are empty. And so, just a month after the bank runs, we've already got a new perfect storm on the horizon. Because if 1 in 5 retail and commercials isn't getting rent, the owner is going to default on his bank loan. There's about $11 trillion in commercial loans outstanding. That's about 20 to 50 times more than the capital buffers in the entire U.S. banking system. If trillions in commercial loans have to take another 40% or 75% haircuts, we could see another 2008-style crash to go with the one we've already got from the Fed-induced bank panics. I think the bigger concern here is what breaks next. Our obscenely over-leveraged Ponzi industrial complex is shot through with Rube Goldberg monstrosities, where it's only a matter of time until something breaks, and the Guardians don't even understand what they're watching. All right, we'll be watching. See you next time.